Hey, this is Awais with EminiPlayer.net, and this is a recap for Friday, August 10th. So heading into the day, we were using 94.5 to 96.5 as the bull bear zone, and overall, we had seen some bearish price action in the overnight, and the expectation was that if we hold below 94.5, we're going to tag the gap at 90 and the naked VPOC at 1388. So let's start here. On the 2500 volume chart, it's an open test drive opening type, which supports the bearish case, and we're looking to short. And if we look at the 1 minute, we can see that the NYC tick is holding below zero off the open. This is the opposite of what we've seen over the last couple of days, where the tick was actually holding above zero. And even though we were opening below value, the tick held above zero the other day, and we moved up. So in this case, the bearish side is in effect. So we're looking to short here, and then this retracement back into the bull bear is also a short setup. But this is the key. When we move down off this bull bear retest, the expectation, if the bearish scenario is going to play out, the expectation is that price is simply going to slice right through the IB low and then head towards that 1390 gap. When that doesn't happen, that's a red flag that the sellers are not as aggressive as they should be in this area. And at this point, I'd be looking to tighten my stop. So if I'm shorting this, then the stop is above 95.5, and I'd be looking to scale out or simply get out of the position, because the hypothesis that we had, which is that this retest is going to result in new lows, is not playing out. And if we look at the tick, we can see that we're not really getting any heavy selling pressure through this area, right? It's actually a minor positive divergence over here. And we're not really seeing what we expect to see when it's going to be a trend down day, or major sell-off, or even sell-off towards the bottom of the current balance area. That's not happening here. So this short setup, you either took a small gain if you scaled out, or you took a small stop out over here, and then we can see that this big bar over here is basically stops being run, and this is where we set the IB high. Now when we pull back, we know that the bearish scenario didn't play out, so now we look towards our bullish scenario. And on the bullish side, we were expecting a test of 1399 quarter to 1400 half, and in order for that zone to get hit, we didn't necessarily need to see bullish internals, right? We could get to that area even on slightly bearish or slightly bullish internals. And we can see on this pullback that we're holding above the minus 200, which isn't extremely bearish, but that's enough to get us to that pre-market resistance zone. So this is a long setup over here. Once we get up here, we're looking at internals. We're seeing that we're still below zero, around negative 100. When you have this kind of context, where the S&P advanced decline is below zero, which means that we're not seeing a lot of upside momentum, what you want to do is you want to use the NYC tick, any spikes on the NYC tick above 600 to actually exit longs, right? Or even potentially look for shorts, because this activity over here on the AD is telling us that the market is not in an initiative phase, right? We're not looking for initiative buying. So in this case, we're going to look for rotations at resistance, and the best time to get in on the short side when you're looking at a bearish context is on these tick spikes up. So tick spikes up over here, and we're looking to take profit on the long side, and then we get this negative divergence on the NYC tick, right, over here, as price is kind of hovering by the IB high and then failing at the IB high. As far as this spike down, this was pretty unexpected. If you were long and you had your stop probably in the 95 to 96 area, then you got stopped out on your long after taking a little bit of profit. But this big bar down was not expected. But we can see again, we got this spike down on the NYC tick and then a rebound to the upside. And again, the AD is holding above negative 200, so we're not initiative on the downside either. So we're not initiative on the upside, looking for rotations. We're not initiative on the downside, and then we again look for rotations back up. And if we look at the internals, we can see that the VIX actually moved lower and now is hovering near its IB low, and then we actually break below the IB low and then hold below it into the afternoon, which is a bullish, supports the bullish case. So if we look at the 5-minute, the trade setups that we have, the shorts didn't really work out, the bear scenario didn't work, but then we're focused on the long side at the bull bear zone, taking profits at the IB high, and the final target is really this initial resistance zone, which didn't quite get hit, but we got close to it near the close on Friday. So basically short setup failed, and then we're looking for long setups at the bull bear zone, final target up here, but we're taking scale outs at the IB high, scale outs at pre-market, and then final target here. That's essentially the recap for the day. We built acceptance at 97.5 on Friday and closed above the value area high. So far we've been stuck in this 89.5 to 1403 quarter range if we're looking at the day session only, and we have heavy acceptance at 97.75, and we're going to be using that as support going into the overnight session. So we'll be using 96 to 98 as the support zone overnight, and we're going to use 94 as the bull bear line in sand. If we go below 94, then we have potential to tag that 90, 88, and potentially lower. As long as we hold above the 94 to 96 to 98, then we're going to be looking for a breakout to the upside. We're still looking for a directional move. The market, if you look at this daily chart, the market's been consolidating in this narrow range, and we're expecting a breakout, right? This kind of price action can't really last for too long. We're going to get either a breakout to the upside or a breakout to the downside and test the 80 and 75. So far, buyers have been really persistent, and the bullish scenario is continuing to be supported. So until we break below 94, I would continue and focus on the long side. And if we're taking shorts, then we're going to be cautious and take quicker profits. But so far, as far as I can tell, buyers are in control. And that's how we'll be starting off the week. Let's see how Sunday night plays out. And if anything changes, I'll post an update on Twitter or on the blog. And then, of course, we'll have an updated trade plan Monday morning. Hope everyone had a good weekend, and I will catch you on Monday.